Ian, lovely to meet you. This is our first time meeting, and you are here from Alberta.
Yes.
Yes, I'm a former Edmonton resident myself. Just tell us a little bit about, first of all, I think most of the people in this room are really familiar with sort of the big five banks, and you're in a little bit of a different space. So introduce people to what the concept is of a credit union and just explain some of those intangibles that people might not appreciate about the difference of a credit union.
Yeah, thanks, Charlsie. For those of you that don't really know what a credit union is, or you think you know what a credit union is, credit unions are, for the most part, full-service financial service providers. Certainly the one that I run is. And we are very focused on meeting our member needs. But unlike the banks, we're not publicly traded. We're owned by our members. And so what that allows us to do is to operate on a different time continuum than just your quarterly or your annual financial statements. Allows us to take a longer term approach. In the case of Servus, we're famous for a few things. We're famous for giving money back to our members. Last year we gave $83 million directly back to our members through dividends and patronage. So they earn money just by doing business with us. And we are able to do things that banks can't. We annually reward our members with $1 million prize. We have a contest that's just ending that we call the Big Share. And this is an incredible tool to help bring deposits in to our credit union from outside, and customers get, our members get ballots based on how much they are saving with us. And every member wins because they're saving for their future, they're meeting their financial goals. And so we're approaching the business in a different way than the banks, and we see it as a true point of differentiation.
And community feel, that sort of smaller, intimate relationship, I feel, is also a big part of that.
It is for sure. So the credit union system across the country is about 160 credit unions left, but the top 30, and we're right at the top, in the top 30 it's about $300 billion in assets, and the rest sort of falls below that. But when you go into a credit union across the country, it doesn't matter if it's a one-branch credit union in Atlantic Canada or Alberta, where we still have some of those, or a credit union like mine where we have north of 130 branches, it still feels different than a bank. Mm-hmm. It does feel more like community. It feels, it has a welcoming feel that I haven't seen going into any of our competitors at the banks.
And I heard you say in a previous conversation, if you haven't been into a credit union, go into one. That's how you can really get the truest picture and sense of the offering.
Yeah, check it out. There's different credit unions in different marketplaces. We certainly do business across the country. We're primarily focused in the West and Alberta, but there are credit unions in your local community. And so if you haven't checked one out, I'd encourage you to do that.
I want to talk a little bit about you. You've had such an interesting journey and path to where you are now, starting at Costco and TELUS, and even having some experience in real estate. Can you just explain how and what it was that led you to your CEO position that you're enjoying now?
That's a great question. You can't really write a resume like mine. If there's a common thread through all of it, I think it's a key focus on people, it's a focus on customer service, it's an understanding of sales, it's an understanding of marketing. And I think my example would just be one that I would share, which is just your skills are transferable. So whatever your job is that you're in now, if you think it's not transferable to another industry, you're wrong, because there's a ton of opportunity in that.
Now, you arrive at Servus, and not too long after, there's a bit of an exciting opportunity that comes your way, something that you yourself had a really significant role in. We're talking about the largest merger in Canadian credit union history. Happened soonish after you arrived. Was that by design? Was that a little bit faster than maybe even you yourself anticipated?
Certainly something that was on our horizon. We were looking at possible amalgamations with other credit unions when I joined. This one, in a way, happened faster than we expected. It was an opportunity with a change in leadership at another credit union, which allowed some conversations to start. But it really changes, and I think this happens in all industries, it really changes your focus. Mm-hmm. We had a lot of things that were on the roadmap that got put on hold for the period of time that we worked through the amalgamation. And in the credit union world, in order to amalgamate credit unions, their members have to vote. Yes. So they have to vote in favor of this. So it's like an election. So I felt very much like a politician. You talked about living in Edmonton. I grew up in Alberta, and I saw parts of Alberta during the time leading up to this that I'd never seen. And, visited almost all of our 140 branches at that time, and just about every community you can imagine across the province. So great opportunity to engage with the community, but like super tough work, very time consuming, and it's to say it's a distraction would be an understatement.
Yeah, I bet. So Connect First merger, it closed in May of 2024, correct? Right. Here we are, May 2026. Can you give us a little bit of an insight into where you are in that process? I think people may have this impression that, the ink dries, the deal's done, and the very next day, everybody's happy and away we go. Where are you? And give us, where do you still need to go?
So we're just past the 2-year anniversary. We're sort of through our major 20 integration milestones. We're on one HRIS system. We have worked through all our titles. We've made all the really hard discussions on what people's roles will be, how many people we need across the organization. That, by the way, is something credit unions don't do very well. Okay. We have a lot of business cases. Ours has already come true. Our financial performance has increased significantly, so that's been a success. But this is a very hard piece of work. We still have one major systems integration step for our core banking and digital banking to go this year. So we've got 150,000 of our member customers that need to move from one core banking platform to another. And I know there's probably many in the room that have dealt with that in different segments of our industry. Even when that goes well, it doesn't go well. Yeah. People get new plastic, their account numbers change. This creates all kinds of areas of potential friction for our members. So we're spending a lot of time and energy to make sure we get that right.
Right. It's funny, I've been working with another business on an integration, like a global integration. It is incredible, the amount of moving parts and the pieces and the HR considerations, everything from wellness to computers. Can you just talk a little bit about some of that real work that happens after the ink dries? What did the merger teach you that maybe you didn't see coming?
I've been through some transactions before, never as the CEO, and it has been you learn a lot, and so you kind of think, geez, if I knew then what I know now, would I do this? Maybe you'll ask me that. I don't know. I don't know if I can answer that question. It's a tough one because there's always things you don't expect, no matter what type of planning that you do. But we learned a ton through what our organization did. We had a consultant who did a lot of work for our group, and
I'm not surprised. Consultants are great.
Well, I won't comment on if consultants are great, and I know there's lots of you in the room. Consultants play a really important role in these things. And this particular consultant told us you will likely make 10,000 incremental decisions related to your amalgamation that you wouldn't make outside of your normal course of business.
Wow.
I thought that's ridiculous. Yes, it'll be busy. I would tell you now, I think that's probably an understatement. So I imagine coming to my executive leadership team, somewhere around 80 key critical items just related to people and culture. Branding, locations, technology issues, what should the size and structure of your team look like? And I think in all of that, probably the largest challenge, and even to your last question, is around culture. So the technical pieces are done, the branches all look good, the systems piece will be what it is this year. But even in a credit union space where I told you it feels different, and it does, you can use the same words, you can talk about members, you can talk about trust and what's important to your constituents, but there are still very different definitions of those words. So bringing two organizations together, in my experience, takes a lot longer than you would hope, and it takes a while to get your team and your member and customer base where you want them to afterwards.
Right. Now, I want to talk a little bit about scale. Servus is now Canada's largest credit union. Are you still holding on to the title?
I think it's right there. I think Van City might be 500 or 600 million ahead of us. Ask me next week when results come out again. But there's 3 credit unions that are kind of 30 billion on balance sheet. We're the largest from an AUA perspective. We've held another 10 plus billion in wealth through a joint venture that we participate with Desjardins. So we're amongst the biggest.
Right. And I've seen some of the social media, sort of the tongue-in-cheek, the back and forth. It's great. But can you speak a little bit about what does being the largest actually mean strategically when so much of the talk or framing around the credit union is this sort of antithesis of that, like this idea of being small and more intimate?
Well, it's a huge responsibility because all the connections to the payment system, how we ultimately connect to the Bank of Canada, has a significantly larger role for larger credit unions, but it needs to work for everyone. So we're struggling with the speed at which we want to move and which the speed that smaller credit unions need to move. So that creates some challenge for us. We want to see all credit unions be successful, but size does matter. And we talk about growing to the size we're at. We're now trying to plan for how we double our size and then double our size again. And we think we can do that and still have these close roots to our communities. And we do that in a few ways. We have things like community councils from the different areas from the 80 communities that we currently serve today. Mm-hmm. So we use that as data and information that comes back. We empower people at our local branch level who are our representatives in those communities. So there's still a community feel. People can still go to their credit union and feel like they're being sponsored and that there's something that's in it for them. So that's been critical in helping us be successful. Okay. And we're seeing smaller credit unions start to come to that, but it's taking more time than perhaps I would like. And I do see a lot more consolidation coming. It's just going to be necessary based on the size and complexity of the business we're in.
So with that in mind, credit unions, right, created as this alternative to banks, but as you and others continue to grow, they inevitably start to resemble those institutions that they were built to challenge. So at what point does a larger credit union risk becoming a bank with a different ownership structure?
Yeah, I think never. My belief is never, and the key difference is what we stand for. It comes in the ownership structure, and it comes in, we are unapologetically ambitious about being profitable. We're by far the most profitable credit union in the country, and we're proud of that. But you need to make money in order to do good things in your communities mm-hmm. and to help enrich your members' lives. So we get to do that, and it creates a different focus. The other thing I think that's critical about a credit union, and this is not to slag the banks, I think the banks do a good job, but our teams, they have performance targets. Mm-hmm. We're a high-performance organization, but we would never want our team to do anything that would hurt a member. We don't want to give them a mortgage that they can't afford. We don't want to increase their credit limit to an area where it doesn't make sense based on their financial position. And so we're looking to help get them out of trouble. And sometimes I find that Canadians are getting in more trouble. So I think we need to get them out. So I think there's a key role for credit unions to play in that.
Fair. There have been some significant changes announced by the federal government. 2025, open banking is coming. There are new pathways to federal status, some other rule changes. So talk to me a little bit about what growth looks like for Servus in this new landscape.
So I think back to credit unions generally. Credit unions are the original challenger banks. Mm-hmm. We were there meeting the need. The reason credit unions exist is because there was a gap in the market that wasn't filled by banks, and it goes back for us 86 years, and in Quebec where the credit union system started over 100 years ago now. And so there's room for us in the sector. And from a growth perspective, I think we have a key role to play in filling that market space. And when we look at what's happening in Canada today, and we look at the acquisition of what we would call some of the second-tier banks. Mm-hmm. When you get below our friends at EQ, there's not a whole lot there. We have some banks, Manulife, Fairways, and others, but the credit unions are sort of right there. We're at the 40 billion level, and we're growing. And there's a space where I think Canadians need additional alternatives. So we have an ability, I think, to scale quickly and to fill that space in the market. So. Our time is now. Some of the tools that are there to support us are going to be critical. So things like the future of open banking, we see as an opportunity. Okay. We see open banking as a net positive for our credit union. We've done work with SimCorp. We've moved open banking data back and forth with Scotiabank, and we'll be prepared for whatever needs to come. And I think this is good for Canadians. It will help to enable more choice. from on the payments side, whether it's the real-time rail that's coming, additional evolutions in what we're seeing from a regulatory compliance perspective. All those things cost dollars and require significant investments for financial institutions. So that's where size matters.
Okay.
And even for a credit union, that's where I think the value of being part of a larger one is very helpful for Canadians, and that's why I think some of the smaller credit unions will continue to want to join credit unions like ours.
Okay. Let's talk a little bit about modernization. Every institution today says they're modernizing. Can you talk a little bit about how you modernize without losing what made the credit union model worth choosing to begin with?
Yeah, so modernization of us is about the modernization of tools. You heard some of this from our different panelists today. So we're in a high trust environment, and we believe, and the data shows that credit unions are amongst the highest trusted financial institutions in the country. So we think that sets us up very well to be successful through modernization. So we are modernizing our systems and platforms. We're taking a journey approach to how we're handling our individual customer journeys. We are evolving how we do business with our members through every stage of their life and every stage of their business.
A journey approach. That's what you mean by that, the life stage?
A journey approach. But a journey could also be like a journey approach for your business banking area or for your retail area. So imagine for us in the future, how you do business with us will be us meeting you where you're at through the medium that you choose. And it will be individual and specific enough to you as a member of Servus Credit Union, but it will also feel uniquely part of the community that we serve. So you'll know you're doing business with us. Our logo is a circle. Our members are at the center of everything we do.
Okay. Now, in the vein of modernization, let's talk a little bit about AI.
Okay.
A lot of people talking about it today, especially in these spaces. I know. How much time do we have?
No, we went a few minutes without AI. That came up this morning.
Right?
We didn't say it yet. That's good.
So let's just talk about you specifically and the role that you see AI having. And can you talk a little bit about how, as a CEO, you're sort of approaching this balance between maintaining the human contact and that element of trust that you just talked about with the speed and the convenience that AI solutions can offer?
So I think for us, what's critical is we're taking a humanistic approach to this. And so what that means for us is we are looking at using AI tools to make our team members better at doing their jobs, trying to free up more capacity for them to have more powerful discussions with our members so that we can meet their needs in a better way. When we grow, we're looking to find ways to say yes to more members to help them meet their goals and aspirations financially through every stage of their life. Okay. So that's critical for us. But how we use AI is there's a few examples. So we, inside our shop today, like many financial institutions, we're very policy heavy. As we talked about, we've come through this amalgamation, so we're merging two sets of policies and two sets of systems and two sets of processes. We put in place an AI agent for our team members from the different divisions, and they're able to use that AI agent as a point of escalation as opposed to calling what we call our SOS agent, which is a senior team of people that can help solve problems. Okay. So we put this in place. It's been in place for less than 2 months. It's reduced call volume to our senior SOS team by almost 40%. Like 38.7% and growing. Wow. And so what that's done is improved efficiency, right? And you get the answer you need, you get it right away.
So what does that look like? I'm an employee in one of your locations and I have like a terminal, a computer I can go to, and I sit down and I can actually, wow.
Do we need to show proof of employment for a car loan? And it will spit out that answer with the corresponding documents to support it. So if there's a question you don't have, you can ask the agent that question. And it allows you to do so lightning quick. So as we're bringing all these other systems and processes together, it's really helped to try to create some efficiency from the team. Now, ultimately, the systems and the processes and the tools will be modernized as we discussed, and they're coming. But even in the absence of that, with the legacy tools you've got, there's way to enhance the employee experience and the ultimate member experience.
Okay. I want to talk a little bit about fraud and cybersecurity. So imagine, for example, I'm a member. I get a call. Sounds just like my financial advisor. It's not. That's the world I feel like we're living in now with voice cloning, deep fakes. Fraud has changed completely, I would say, even in the last couple of years. The threat is a lot more sophisticated than I think a lot of people even realize. I feel like every other day there's a story about the next scam. Can you give us some insight into how Servus has had to change the way it's thinking about protecting members?
I think what we're seeing is consistent with the industry, where we've had to spend a lot more time, energy, and effort. Education is critical, so educating members on what potential fraud can look like. Working through the existing tools we have around mandating things like two-factor authentication. So all of those things are helping, but we talk about AI, so the darker side of that is the speed of fraud and bad actors and their ability to get access to some of these things, and then AI as tools and their ability to impersonate. We've said more than enough for them to impersonate you and I in probably 30 different languages right now. So I think that's ultimately the world that we're working in. So we are using all the tools that we've got. We've got an additional focus. We're investing dollars in these areas, and we have developed our own own internal proprietary fraud agent that we're using. But at the end of the day, this takes a village, and it's been talked about here today. Sharing fraud data amongst financial institutions is critical. We're going to see that. It's a requirement for the real-time rail as we all move to that in the coming months. And that's how we win. Nobody wants bad things to happen to Canadians, and by working together and sharing that information on the back end, I think that's how we stay ahead of it.
And you've mentioned trust a couple times, even in this conversation. It really used to be built in a branch over time. I got to know my financial advisor. I would walk in, and I still remember filling out a paper deposit slip for my first bank account. Can a financial institution still be relationship driven when so much of the banking that people are doing, especially this next generation, is happening online through an app? They may never even meet a person in a bank or a credit union.
I think it's both. And so we have in credit unions generally, and not specifically, our members' age is a little bit older, or skew a little bit older. So what that means is we have probably a higher propensity of customers that would still want to go into the branch. But we're also looking to have members that are through multiple generations. And so that's why we're really focusing on our digital future. One of the greatest examples of sort of evolution in the cooperative space that I've heard is a former CEO of a Calgary Co-op grocery food store chain took over that job and made a whole bunch of changes to the look and to the feel inside the stores, and you know what, the older members didn't like it. I don't like it, it's too bright, I don't like where everything's been put. Well, you know what, it increased their growth, it brought younger members in, and for as upset as some of the older members got, they're so loyal that they're not going to leave. And so we're in that position where we're able to modernize because the connectivity and the trust of our older members is there, that they're very well attached to us.
Okay. I will ask you about fintech and some partnerships. I feel like it was sort of this idea about being modern, right? Now some of these partners are really sitting between you and your members. How are you deciding who gets in? And when does a partner start to become a problem?
Well, I think, great question. I'll probably start with the end. So where does a partner become a problem? Well, we're trying to manage, all of us trying to manage third-party risk. So when you are trusting partners with your trusted information of your members, their business, their personal information, your banking data in some cases, super critical that everything is being done through your partner or your partner's partners, and that information is safe. There are many, many examples that we've run into recently where there are gaps in information that we're seeing. Desjardins had a huge challenge in their space going back not too long ago. So we're being very particular about our partners. I would say fewer partners, but we're also asking for a lot of our partners as well to helping us through these journeys, looking to help evolve the systems in a way that makes sense for us. And we need them to move with speed. We need them to be focused on security, and we need them to be listening to our very specific needs. And so sometimes that means dealing with larger companies. Sometimes that means you deal with a smaller partner because you have a larger voice than dealing with a large multinational company. Okay,
let's look ahead a little bit if we can. I think it's sort of fair to say this cooperative model had some genuine moral appeal. It's a nice feel-good way to think about how we're banking and looking after our money and our financial future. But respectfully, moral appeal is not a strategy. So what does the credit union model have to evolve to or change in order to remain competitive, but also to attract some new business?
Well, I think there's lots that we need to do. So I talked about how trusted we are. I think that's true. Trust isn't enough. If we want to have younger Canadians do business with us, and we do, and we are starting to earn more of their business, there is zero tolerance for anything other than immediacy around the access to their financial information, the speed around the movement of money, the offers that they're looking for. So they can agree with our cooperative values and they can feel like they're doing business more locally or as part of a community, but that's not enough. In order to differentiate, you have to have all of those other items as table stakes. And then I think the values as a layer onto that give us an advantage.
Okay. And lastly, I'm going to finish on this because I'd love your take. If you were building a financial institution from scratch today, you are truly starting over from the ground up. There's no legacy system in place, there's no branch network, no governance, no nostalgia, no attachment to anything in the past. Would you still build a credit union?
Yes, but I would build it very, very differently than what we have today. In our sector, generally, banks and credit unions have been around. We talked about for how long they've been around, like 100 plus years. So you have systems that existed which were part of money movement from before the internet was created. Mm-hmm. So I would not create them in the same way. We would look at like a very, very different structure. And I think there's a way to streamline that with tools, which is what I think many of our new competitors that are coming in are doing so well. Harder when you're dealing with data. Lots of discussion of data in the last session and others is the ability to utilize and access that data to make sure you're doing the best job possible for your customers or members is critical. And so we've made a ton of strides with our data, but it's still very hard based on our legacy system stack, and I would do that very differently.
Okay, wonderful. Thank you. Anything else that I didn't ask you that we should know about your
I feel like we covered
space?
a lot.
We
there were
sure
some
did.
questions I didn't know were coming in there, so that's okay.
Great.
That's good.
Good. Yeah, thank you.
Thank you.